We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Justin Huhn, founder and publisher of the Uranium Insider newsletter. Thanks for joining me today, Justin.
My pleasure, Tom. Good to be with you again.
Excellent to have you back. You know, it's been a while since we've chatted, and we typically start with the new developments in the space when we speak. So, you know, interestingly named Inflation Reduction Act was being passed this week, and a big part of it was the green initiatives. So, are there any provisions for nuclear energy as part of this bill?
Yeah, and I would say that's really kind of the bright spot of the bill. Without getting into it, it's definitely got a lot of negative aspects to it in terms of how it's going to affect the middle class of this country. But the Inflation Reduction Act ended up having quite a lot of provisions that will be beneficial for domestic nuclear energy here. And so one of the primary provisions is a clean energy production tax credit. And this tax credit, I believe it was $30 billion, I think, over 10 years, if I recall correctly. This should be sufficient financial support to keep any reactor that's kind of on, let's say, on the chopping block due to financials, should keep that online and up and running. This is very, very positive going forward for the existing fleet, which is the largest in the world. We have 92 operating reactors. And a number of those are set to come offline by, let's say, 2035. Something like 30% of the entire fleet in the country is set to come offline in the next 12 to 15 years. So this should offer sufficient financial protection for those reactors that are on the edge of profitability and considering or planning to shut down. And I think importantly, you know, equally as important as the funding itself is just the acknowledgement of nuclear as very, very valuable clean energy, baseload energy. And that's been a very, very long time coming for nuclear advocates in this country to finally see it get its due in terms of acknowledgement of its importance and going forward the support that it'll need.
So, Justin, you know, what are the economics of those plants that they need financial support? If they're running at a reasonable capacity and producing cheap electricity, shouldn't the economics be sufficient to keep those plants running? Or is it when they need to, you know, do maintenance to extend their lifespans?
Sure. Yeah. I mean, some of the reactors, it's a bit complicated because there's various markets in the United States, right? So you have, deregulated markets where nuclear has to actually compete on price with all of the other energy elements, as part of the local grid. So, for example, in California, where we've had a massive expansion of solar that's had a lot of subsidies to support, the solar, huge solar plants out in the desert coming online. You know, the California's Diablo Canyon actually has to compete on price with other sources of energy like solar that has been highly, highly subsidized. Therefore, even though it's not baseload power and there isn't energy storage, still, when the sun is shining, the energy coming from the panels is cheaper than what the nuclear reactor can put out. So that's one element of it. And then also, like you mentioned, some of these plants are aging and they have ongoing maintenance costs that as the plant gets older can get more expensive. So if a plant has too much maintenance costs baked into it or projected maintenance costs out past where it could be brought offline, those maintenance costs could now help to be covered through this funding and keep the plant online.
So, Justin, we've just passed the 1-year anniversary of Sprott's SPUT Uranium fund going live. So, looking back, did that have the reaction in the market that you thought it would?
Honestly, I think it's been an absolute blessing for uranium investors. If anything, for two reasons. for clearing out a lot of just above ground mobile inventory that has, been sitting around for years and years and years. And that's just been absolutely cleared out. And two, for providing a lot of transparency into the spot market. They operate a very professional vehicle with SPUT, and they update their premium or discount to NAV every single day. They track the pounds that they're purchasing, and you can see all of that on their website very, very transparently. And they've purchased, what is it, something like 38 million pounds over the last 12 months. Just absolutely huge. And, they purchased 16 million pounds this year alone. And even though they've been, pretty hamstrung over the past few months because we've been in kind of risk off conditions across markets, what they've done to the market is really bring so much transparency. And now it's basically understood across the investing space and across, the fuel buying space within the nuclear industry that the spot market for U3O8 is quite thin. And anytime there's any purchasing of meaningful volume there, we see a pretty dramatic response in the price. So, and I think honestly, a lot of people have given up on the SPUT vehicle, especially retail. I think that institutions continue to accumulate. That's my opinion based on what I see in the charts. But I think there's a lot of doubt around SPUT, and I think it's absolutely going to have its day again when the risk comes back on the markets. So when the ATM first went live on the 17th of last year, August, I don't think anybody expected it to move that quickly and to have that dramatic of an impact. I don't think even Sprott expected that. So it was definitely a pleasant surprise to see how quickly they were able to, just to see how quickly the vehicle was adopted by institutional money. I think that was a very good sign. Mm-hmm. And to see how quickly they can accumulate pounds when the financial risk is on, it makes it a very significant element of this very complicated fuel cycle and nuclear fuel market. Just to have this sort of looming financial element that at any time could come back in and buy a lot of pounds as soon as money comes back into the markets. So it's quite an interesting development.
Mm-hmm. As you were talking about the doubts that maybe the retail side of the investing community has in SPUT, where do you think that doubt comes from?
I think it comes from them trading at a significant discount to NAV persistently. Like the whole theory behind, coming from Sprott, behind the discount to NAV basically being an opportunity for investors to come in and buy, cheap pounds. If you can buy pounds at a 10, 12, 15% discount to NAV, you're going to take that opportunity. And I think that the fact that it's traded at a significant discount, between 5 and 15% for the past 2.5, 3 months is kind of like, well, you guys at one point during this risk off period were sitting on almost $100 million in cash. You could have filed a normal course issuer bid and sold a little bit of pounds in the market and bought back shares, or you could have just used some of that cash to buy back shares at a discount, which would have been accretive to shareholders, and they didn't do that. And I think that would have been an intelligent move for them to make. Even if it didn't close the gap, and even if we still had months of risk off ahead of us, still as a signal to the market that, okay, if we're sitting on cash and we're at a 10, 12% discount to NAV, we'll go ahead and buy some shares and try to close that gap. But they didn't do that. So I think that there's some justified criticism. But, it also just kind of goes along with Mr. Champaglia's confidence in the vehicle that, to be fair, he talks to extremely high net worth institutional investors far more than most of us do. And so he probably has a better picture on where this thing is going to go when risk is back on. So maybe for him, it's just like, well, it's the summertime. We'll just be at a slight discount to NAV, and that is what it is. Anybody that wants to buy pounds at a 10, 11% discount to NAV can do so. So I think that's what's caused really the doubt, is that, well, there's no mechanism built into this vehicle to close that discount to NAV, which is true. And although, like I said, they could file an NCIB and buy some shares back with cash. But at this point, now they've got 35 million in cash, so they don't have a whole lot of money left. they're going to have to probably just sit on that as a little bit of a cushion and wait for some risk come back on, push that thing back up to a premium where they can raise more cash. So I think it's happening. I think it's happening this quarter, but it's been quite a slog.
Do you know what any type of their storage fees, like what are their costs associated with storing those pounds per year?
I actually don't know that off the top of my head. I know that they do have storage fees at the conversion facilities, but I think it's not a significant cost, all things considered.
Okay. So, Justin, I think the last time you and I spoke was actually right before the conflict in Ukraine started. So how has that affected the uranium market? Of course, Kazakhstan is a former Soviet state and they supply something like 40% of the world's uranium supply. So have we seen any slowdown or interruptions in supply due to the conflict in Ukraine?
Yes, we have. We've definitely seen, well, not necessarily slowdowns in production due to the conflict in Ukraine, but we have seen slowdowns in production from Kazakhstan. We've also seen interruptions to deliveries, and that's been kind of the primary, the primary interruption in that region has had to do with transportation. Their normal transportation route goes through the port of St. Petersburg, and that has definitely been a problem for them this year. So they continue to signal to the market that they are working on a route that heads straight west, that goes through the Caspian and the Black Seas. That route, I believe that they'll work that out and they will be able to ship uranium without going through Russia to the west. But we continue to hear that Cameco has yet to receive any of their pounds from their JV Inkai project in Kazakhstan this year. So it's definitely been problematic. And then I think just Kazakhstan is in a very precarious position, geopolitically speaking, just kind of between Russia and China. And there was a tweet that came out from one of the higher ups in Russia that was almost immediately deleted a couple of days ago, where they basically were kind of like expressing sort of disgust at Kazakhstan for sort of thumbing their nose at Russia and not supporting Russia in their operations in Ukraine, and kind of alluding to, well, Kazakhstan is next kind of language. And then they pulled that. And Kazakhstan has definitely been doing everything they can to sort of message to the Western world that, we're not in support of what's going on over here, and trying to maintain some level of friendliness towards the West. And, Kazatomprom as a company has done the same. I think they've done as best a job as they can, given the circumstances. They actually released an operations update this morning, and they put out forward guidance to reduce production by 10% in 2024. And so considering the current and expected price environment for uranium, basically what they're saying is we're having trouble keeping up those levels of production for whatever reason that is, whether it's they haven't been able to keep up wellfield development due to maybe labor shortages, whether they've had problems with sulfuric acid shortages. They don't really give you a huge peek behind the curtain, but considering that their all-in costs are like in the low 30s, even if you include dividends and things like that, and maybe that's a little bit higher these days, but at $48 a pound, they're printing cash. And in the perceived cost environment for 2024, which in my opinion, we will likely be much, much higher, probably north of, $80 to $100 a pound, if not higher. The fact that they're saying they're going to have a 10% reduction in production is pretty substantial. So something is interrupting their wellfield development, because you have a lag time, right? 2024's pounds coming out of the ground has to do with 2023's drilling. Mm-hmm. So they're expecting some sort of impact, whether it's from their inputs or their wellfield development over the next 12 months, that's going to affect 2024's production. So I thought that was quite curious.
So in that vein, has the rise in the price of oil and maybe supply chain shortages, like you mentioned, of sulfuric acid, for example, over the past 2 years here, made things more difficult for producers? And could this ultimately set a floor under the price, or is this too hard to really take into account considering the opacity of the market? Well,
I think that the rising cost structure that's happening for everyone everywhere is also happening in the mining industry. And so you've seen, one glaring example of that would be Paladin. They released their CapEx estimates for restarting Langer Heinrich. They released those estimates back in November at $87 million. They just released an update to those estimates last month, and it went from 87 to 118 million. So it was a jump of about 30 to 35% in CapEx in less than a year. And that's going to affect the bottom line for them. And that's going to affect, what they're going to need in terms of pricing going forward, selling into the market. So 100%, I think that if anything, the market is making assumptions that these projects will be able to come online easily and cheaply. And that is 100% not going to happen. Even with mines on care and maintenance, we're talking about them taking longer and costing more. And these are mines that were producing a few years ago, let alone greenfield projects that we're going to need in the back half of this decade. So that's yet another element that's leading towards much, much higher prices for uranium.
So, Justin, taking a much broader lens, are we seeing more support starting to shift in favor of nuclear energy in the world? Where are we at, for example, with Japanese plant restarts?
There's a lot of strong language coming out of Japan. There's yet to be a lot of strong action coming out of Japan in terms of restarts. The new Prime Minister Kishida has the strongest language of anyone from Japan of late, basically saying they want to restart as many reactors as possible, as aggressively as possible. But that is yet to really manifest. It's still slow going in Japan. They're still very cautious around the plants that they want to restart, and making sure that they are they're safe, and they've implemented even kind of like anti-terrorist measures. I don't exactly know what that looks like on the reactor level, but a couple of the reactors that have restarted since Fukushima have since come back offline so that they can implement these upgrades to the plant safety mechanisms. And so it's just slow going, and it's really reactor by reactor. Some reactors have, generally speaking, now you have the majority of the public in support of faster restarts. So that's a really big shift. And you have the federal government and most local governments in support of it as well. So the tide is moving in that direction, but you still have the occasional reactor here, reactor there, where the local communities are not in support of restarting it. And that has to happen. You have to have the support of the communities surrounding it. And that's one of the legal steps towards the restarts, is you have to go within, if I recall correctly, a 30-kilometer range around the plant and have the approval of any local communities that are within that distance. But with all of that said, the 11th reactor restart will happen in Q1 of next year. And they still continue to shoot for a 20 to 22% of the total grid by 2035 to be nuclear. And what that means is basically another 20 reactors restarted. And so that's what they're guiding for. And it does seem like they intend to meet that goal, especially considering the unbelievable fuel costs that they are having importing coal and natural gas. They basically need to import almost all of their energy. So it's a no-brainer for Japan. And they have this unbelievable nuclear fleet. I watched this incredible documentary. I'm forgetting the name of the plant. I'll have to dig it up for you. It's an advanced boiling water reactor that they built in 2001, and they finished it in less than 5 years. And it started operating in 2006, and they shut it down in 2011. And it was so heartbreaking because it was so unbelievable to see the craftsmanship and the pride behind building this reactor, this unbelievable, marvel of technology. And they filed for that to be restarted in 2014, and they're still waiting on approval. So, hopefully more of these unbelievable designs and reactors that we're operating for even a very short time can come back online.
Mm-hmm. Yeah, if you could send me that link, and we'll put it in the show notes for people. So, on that same kind of idea, are European plants such as those in France and Germany staying open now, bracing for the energy shortages that these countries are facing here?
Short answer, it's complicated. There's been a lot of problems with France's nuclear fleet. that it's been, a decade of underinvestment in nuclear, and it's only more recently that they've shifted and gone back to keeping the majority of their fleet online longer, and even saying they want to build another, 6 or 7 large EPR2s, with Macron saying that, I think, within the last 12 months. So it's only a recent shift, and now EDF is going to be 100% state owned. They were majority state owned previously, but now it's going to be an entirely state owned entity. They've had a lot of problems with maintenance. They've had a lot of problems this year with certain reactor design, with corrosion that they've been addressing, and so their fleet has been running at 50%. Which is a big problem because France is the largest exporter of electricity on the planet. And a lot of that has to do with their nuclear fleet. So the surrounding countries are also in kind of dire straits when it comes to energy because of this. Now, France it's looking like some of those reactors that have been offline for the past, let's say, 4 to 6 months due to these maintenance issues should come back online prior to winter really hitting. But they're also, Europe is facing a pretty vast drought. And so a lot of France's reactors are sitting on, right next to rivers that historically run quite a bit higher. And those reactors rely on the water from the rivers for their cooling. So they've had to reduce capacity because they haven't been able to draw as much water. And there's problems with the water temperatures rising too high. So it's just been a mess. It's been a mess. All things considered, nuclear has still been relatively reliable for the countries that are operating nuclear in the EU. We've seen Belgium actually shift and reverse course on their planned closures of a couple of their remaining reactors. Germany is still, I don't know what's going on there. You had the Wall Street Journal come out with an article earlier this week saying that Germany plans to keep their last 3 reactors online. Then you had, what was it, their Minister of Energy, whatever, come out within hours of that article being released saying, yeah, no, that's not happening. That's fake news. So we don't really know exactly what's happening. I mean, they absolutely should, of course, keep those online. All things considered, they're now paying record electricity costs in Germany. So nuclear has had its challenges in Europe, especially in France, but much of that has to do with underinvestment in the sector over the past decade.
And of course, you and I were talking before we hit record here today about one of the nuclear power plants in the Ukraine and how much electricity that actually supplies to the country. So are there threats directly to that plant itself from Russia?
It's hard to tell. In my opinion, and this is just my opinion, I don't see why there would be threats from Russia. So I think a lot of the arm waving around Russia's going to cause a nuclear accident here is absolutely unfounded and misinformed. Russia, in my opinion, does not want a nuclear accident. They want control of that plant. That plant's in monster. It's 5,600 something megawatts. It's 6 reactors at 900 something megawatts. It's an absolute monstrous plant. If I recall correctly, it provides something like 25% of the grid for the entire country of Ukraine. So it's a pivotal asset, and Russia wants to control it. And the latest that I saw is it looks like Russia is going for planned non-operation. I think that they're going to try to scale it down to produce, essentially bring it down to not operating. It was a reactor built by the Soviet Union, so they know how to run it. And I think probably the long-term vision for it is just to maintain control of that reactor, if not potentially reroute where it's powering. So, I mean, if you can shut off the energy for 25% of the country, that's it's a pretty brutal move, but it's a pretty pivotal move during that type of conflict. So in my opinion, that's what they're trying to do. I think that Ukraine is trying to do everything they can to stop them from controlling the plant. Does that mean that they could even sabotage it and damage the plant? I don't really know. There's certainly concerns around that. I think that you have like Turkey's leader Erdogan made a statement the other day, like, we don't want Chernobyl Part 2. It's like, you're not going to have Chernobyl Part 2. These reactors are under 2-meter thick containment of concrete. They're designed to withstand a 747 like plowing into the side of it. So the reactor cores being damaged is highly, highly, highly unlikely. I think if there was damage to other mechanisms in the plant that interrupted operations, well, you still have the reactor cores behind containment. So another Chernobyl will never happen at these plants. That's not something that will happen. With that said, does it give you the warm and fuzzies? There's fighting going on around the nuclear plant? Absolutely not. I think it's terrible what's happening, but I think that a lot of the fears around Chernobyl Part 2 is coming are just totally misinformed and insane.
Yeah, one would think that this many months into the conflict, if Russia actually wanted to do something like that, it would have happened by now.
I mean, Russia has nuclear weapons. I mean, if they wanted to have a nuclear event, they would drop a nuclear weapon. I don't think they want to do that. And if anything, honestly, what's happened at that plant in the past 4 or 5 months has been a testament to the robustness of nuclear plants. I don't think this is going to slow down the build outs that are being planned and are currently happening. It's really kind of a testament to how robust these things can be.
So Justin, considering that we're in the third week of August here, what is this time of year typically known as in the markets?
Oh, the summer doldrums. I mean, this is the most quiet time of the year in all markets. It's more quiet than the week between Christmas and New Year's in terms of trading volumes. And so it's always very, very quiet in July and August for nuclear. A lot of the fuel buyers are on vacation and they're just kind of taking some time off prior to what is a recouping and a resumption of operations in the fall. And the reason for that is you have a number of conferences. You have the W&A happening the first week of September. That's always a big event. And these are especially big events this year because of what's going on with the nuclear fuel market essentially being bifurcated due to the West cutting itself off from Russia because of the conflict in Ukraine. So you have W&A in September. You have another fuel conference happening in, I believe it's late October. You have the U.S. nuclear fleets beginning of their fiscal year on October 1. And so all of this really kind of coalesces to a strong seasonal period, typically speaking, for uranium, for nuclear in Q4 into Q1 and even late Q3. And so, and seasonality doesn't happen every year, but, and it certainly didn't happen last year to the extent that we thought. I mean, it did kind of at the beginning, but we just kind of overshot and had to pull back from that due to SPUT. But this year, I think we're in for a really, really strong move. And the reason for that is that this bifurcated market has already pushed up conversion and enrichment prices significantly this year. They both are up over, I believe it's 60% year to date. U308 is mostly flat. It's slightly up on the year. But what happens is the utilities are basically, utilities in the West are trying to figure out right now what is going to be available in terms of conversion and enrichment, and especially enrichment. It's looking like conversion is going to be sufficient in the West to provide for the West, barely, but it should be sufficient. Convernized Metropolis is coming back online next year, and that'll be helpful. There's potentially another conversion facility that's been shuttered in the UK that could be coming back online. That's just kind of rumored, not official. But conversion should be handled even if at elevated prices. Enrichment is going to be impossible in the short and midterm to expand capacity quickly enough. So what the enrichers are having to do is raise the tails assays of their centrifuges, which means there's more of the fissile isotope in the waste material from the centrifuge process, enrichment process. And that means more feedstock is needed to produce the same amount of enriched uranium product of EUP. So more feedstock, more UF6, more natural uranium has to come in the front end to get to the same amount of demand of EUP on the back end of that process. And so that's already happening. We're already hearing that Western enrichers have substantially raised their tails assays for their spot enrichment. Their contracts might still have to be operating at the level that they contracted at. But going forward, signing contract for 2025 plus, we're talking about much, much higher tails assays. And that is a significant bump in demand for uranium. So you have this, this is what is known as overfeeding. Just way more feedstock is needed to produce the same amount of enriched uranium. all of these calculations are what are going into these contracts right now, right? And so utilities in the West are figuring this out currently. And what that means is if you're a utility and you're contracting for, let's just say 2025 to 2030, the first thing that you have to deal with is enrichment. You have to understand where you're going to be getting that enrichment from, what you're going to be paying for it, how much SWU will be used, what the price of that SWU will be, which is also significantly on the rise, and what is the tails assay of that contract. And that calculation spits out a number of how much UF6 you'll have to feed into the front end and how much uranium you'll have to buy. Now, here's the kicker. Over the past 10 years, and especially when SWU was extremely cheap, and it bottomed, if I recall correctly, in August of 2018, you had a lot of excess enrichment capacity. And so what happened from that capacity excess, a lot of this came from Russia also at the time. So Russia is the biggest player in enrichment. So they had the most underfeeding, the most tails re-enrichment. Excuse me. All this excess enrichment capacity, because SWU was so cheap and demand was so low, enrichers were doing two things. They were running their centrifuges at lower tails assays than what they had contracted for with the utilities, which means you sign a contract with the utility for enrichment, you sign it at 0.18 tails assay, and then you actually spin it down to 0.16. You need less feedstock, you underfeed the centrifuge, and that excess UF6 that the utility gave you, you sell that into the spot market as UF6, right? Underfeeding. Then you also have this excess capacity where you can take tails material from previous enrichment processes, put it back into the centrifuge and re-enrich it back up also to UF6, back up to natural uranium. Two sources of UF6 that utilities and traders could buy from enrichers. So utilities could go straight to the enricher and buy what they need in terms of EUP and UF6, and they could avoid the purchasing of U3O8 entirely. That happened a lot. Okay. So you had a lot of excess capacity, at least 25 million pounds a year coming from those processes. That's gone. Okay. Gone are the days, at least in the West, for utilities to buy enrichment for uranium. They can't do that any longer. So not only are you getting this calculation of higher tails assays and that is spitting out a much larger number of uranium that's needed on the front end, but you have to actually buy the uranium now. Okay. And so there have been, of course, 25 million pounds does not provide the global fleet. So some uranium had to be purchased, but to the extent utilities could simply just go to the enricher and skip the first two processes, which is buying U3O8 and getting it converted into UF6, you can buy the UF6 from the enricher and run it through that enrichment process and get your EUP, fabricated fuel. Bob's your uncle. Skip the first two steps. That's gone. So you have overfeeding combined with the fact that utilities are going to have to buy that uranium and run it through that process as they used to. So that's the big calculation that's being worked out right now. And since we're seeing a lot more long-term contracting, it's actually happening. We're seeing 75.6 million pounds of U3O8 contracted this year in long-term contracts. That's the most that we've seen since 2012 in terms of year-to-date term contracting. Very good sign. But all of that demand for conversion and enrichment and that calculation I just described, that's all coming to U3O8. That's coming, and it's coming very, very soon.
Mm-hmm. And of course, you have a poll on Twitter asking if people understand what enrichment tail assays are. So there's your explanation, right?
Yeah, exactly. It's a really crucial thing to understand, and it's a little bit complex. And most retail investors in this space, they're just watching the movement of the spot price, and so they see like, there's all this positive news, and the spot price is up 25 cents, and my stock is down 5% today. What gives? That's not how you invest in this space. You have to be a contrarian even in a bull market. That's the unique thing about uranium is it doesn't move on the timeline that you think it should. And that's really the hardest part about this investment. And so, you have to be patient with it, and you have to understand what is coming and feel confidence in your positioning. That's the hardest part. So that's what we really try to clear up for people.
Mm-hmm. So have we seen, more M&A activity heating up in this space? And is this a positive sign for the sector?
There definitely has been. UEC has kind of been on a roll up tear. So they bought Uranium One's assets. What was that? Earlier, beginning Q1 this year, I believe, or maybe it was Q4 last year. That was a big move. They have now just completed the acquisition of UEX, and UEX has a number of assets in the Athabasca Basin, Saskatchewan. That was an interesting roll up because UEC is based in the United States. So the Uranium One acquisition really made a lot of sense for them. This one is a bit of a head scratcher, but it looks like they're just going for kind of a pounds in the ground rolling up, and they made it happen. And so, yeah, that's been kind of the biggest story in terms of M&A has been UEC and what they've been up to. Clearly, it's a good sign for the sector. And clearly, this is not the type of action that you see companies engage in bear markets. I believe strongly that the companies involved in these transactions, and there was a bidding war for UEX. DNN, Denison was coming back multiple times, higher offers, trying to take it out. Ultimately, UEC won that bidding war. But the fact that these two companies are fighting over these assets that are basically pounds in the ground, that's bull market action. And so these companies believe that this market is going to be constructive going forward, as do I.
So, Justin, I've heard you say that the next bull market could rival the last. So have we touched on all of the factors that are stacking up to make this so?
We probably haven't touched on all of them. I think that, this bifurcated market really is the big story, at least for the short term to the midterm. And I think that it's going to stick. I don't really think that we're going back to how things were operating in January of this year anytime soon. It doesn't seem like this bifurcation is really something that's just going to go away, even if tomorrow Putin was like, just kidding, we're pulling back. It seems like this is going to stick. So, and this is not historically unfounded. I mean, we've had bifurcated markets in the past. I mean, we had a bifurcated market in the mid 90s for uranium. So this, in my opinion, could be a bull market that lasts until we have expanded enrichment capacity. I mean, and we're talking 5+ years if the enrichers start now on expanding that capacity. And so, there's kind of this classic trope of $1 billion for $1 million, $1 billion for $1 million SWU. And honestly, that cost, I'm sure, is risen. It's probably more like $1.5 billion for $1 million SWU. And it's going to take a very, very long time to expand these centrifuge processes. Now you have global laser enrichment with Silex and Cameco, and that is probably going to happen. And that's probably going to be some supply of enrichment 5+ years out. But this could be a roaring bull market until that time. And so I'm very, very constructive. Nuclear continues to be a growth story. We've already discussed on this podcast what's happening in the States, what's happening in the EU in terms of re-embracing of nuclear. One really exciting element to that whole story of nuclear's growth is SMRs, small modular reactors. And I think if you or your audience haven't read it yet, there was a piece put out last month by Segra Capital where they discussed kind of the advent of SMRs and the growing momentum around SMRs, and really kind of tuned into the perceived demand from SMRs. And I think it's far, far more significant than anybody's actually baking into their calculations going out towards the end of the decade and even potentially sooner. And two really important points that this article made, and I wanted to really give these guys credit, are one, that nuclear utilities always source their nuclear fuel years and years and years in advance of when they actually need it. So all we really need to see is the beginning of construction of some of these SMRs, and you're going to start to see that nuclear fuel demand come from these SMRs. So even if we're saying, oh yeah, these things aren't going to be up and running until 2028, 2029, 2030, well, we could actually see demand for uranium for that start in 2024, in 2025. I mean, that's tomorrow in nuclear. Mm-hmm. So that's kind of point one this article makes. Point two is that a lot of these SMR designs are based around what's called HALEU, high assay, low enriched uranium. So, to the article's point, they really could just call it middle enriched uranium or mid enriched uranium. It's uranium that's enriched higher than the average large reactor, which is around 4.5% U-235, but less than 20% U-235, which would be high enriched uranium. But it's a much higher enrichment level than what we're seeing for, average, pressurized water reactors that are operating around the world right now. And what that means is these reactors can operate for a very, very long time between refuelings. I mean, we're talking potentially up to 15 to 20 years without refueling, which is unbelievable. But that larger level of enrichment going into those initial core loads requires much, much more uranium on the front end load. So even though these reactors are going to be operating at a much smaller level, 50 to 300-ish megawatts instead of 1,000 megawatts, the level of enrichment is going to require a much larger initial core load. And so these initial core loads being significantly higher per megawatt, also relative to these fuel needs being sourced years in advance of when they actually need that reactor fuel, means that SMRs could actually mean demand in this cycle. And that's not something that anybody's really considering. And there's so much positive momentum around SMRs. Bill Gates' TerraPower just raised $750 million last week. They're going to be building the first SMR that is planning to be connected to the grid in the States. That's their Natrium reactor in the state of Wyoming. Very, very cool design. And so they raised it like that. And there's so much positive momentum behind SMRs. So that really could be an absolute revolution in terms of, tomorrow's nuclear. It's very, very exciting.
Mm-hmm. Well, Justin, I think we've touched on a lot of the points that I wanted to get to here. Do you have anything else you'd like to share with our audience before we wrap up?
I don't think so. I think we covered it pretty well. I think that really it's all about just trying to understand what's going on in the fuel cycle. And when you understand what's happening in the back end of the fuel cycle and what that means for uranium going forward, it's difficult to not be excited right now. And, these are just, this is just summer trading in the midst of a general kind of risk off environment. We've seen a bit of recovery in the markets over the past few weeks, but still a lot of recessionary fears around that. And it's easy to get lost in those in that fear, uncertainty, and doubt around markets and economies, generally speaking. But focusing on uranium, I mean, I really think this could be a bull market of epic proportions, and everything is lining up to support that. So super, super exciting times. I'm hoping that in hindsight, this interview, August 19th, is going to be perhaps a matter of weeks before we see a really, really strong next leg up in uranium.
Well, time will tell. And next time we speak, hopefully we can touch back on that.
I hope so. I look forward to it.
Excellent. Of course, you're available at Uranium Insider on Twitter and uraniuminsider.com, where you have a newsletter, both paid and free, I believe, right?
We don't put out a free newsletter any longer. Okay. We do give out free samples of previous newsletters. But no, it's just the paid product at this point. Yeah, uraniuminsider.com. You can find it there.
Perfect. Thanks so much for your time today, Justin.
It's my pleasure. Thanks, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.